All right, I'm welcome back for another episode of Carnivore Trades. Today is Tuesday, November 15th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Real quick before we get started, I know you guys have got some messages I'm a little bit backed up on. I've been having some site issues I'm trying to work out. You guys know that I'm doing some upgrades on the site. I talked to members about this earlier today, but if anybody feels like they're being ignored, it's not on purpose. I'm just up to my eyeballs right now with site issues, tech issues, stuff like that, and we're working on that as fast as we can. Nobody's being ignored. It's just kind of the nature of it right now, but I am excited to get these upgrades done and get back to the charts, because I'm honestly spending more time on this stuff than I am on the charts right now, and I want to get back to doing what I do best here. So anyways, into the markets. So producer price index this morning came out with kind of another soft print. I didn't even really mention this yesterday because typically the producer price index is not, I mean, it is a leading indicator. And if you ask me, it should be an indicator that the market pays attention to, but the market really doesn't care about it that much. So I didn't even bother talking about it yesterday, but you can see we had that big bid on it at 8:30. And really, you know, it was a big bid, but considering the normal level of volatility lately, this is not much. And you can see we just kind of faded that off. Possibly a little bit of distribution going on in the middle of the day here, or really in the morning. And then, of course, we got that report. I say quote-unquote report because there was really unconfirmed about, so missiles hitting Poland. I guess Russia's denied it. That's good enough for the algos, I suppose. What the market's telling us about, you know, what it thinks about this right now is that it's either a nothing burger, and the market is kind of telling you it's that, or they need the market to stay sideways until Friday because it's options X week. Now, in no way, shape, or form am I like saying that, you know, the Polish government is colluding with market makers here to like keep the options premiums burned out. But you can see, I mean, we sold off really sharply right there for about 20 minutes. Maybe 30 minutes. Yeah, so 30 minutes there, 3 10-minute candles. And then we just kind of floated right back up. And it wasn't even really a V shape. I mean, it kind of was, but, you know, we had a doji candle here, another kind of candle that backed off, another kind of long-legged doji, and then, you know, we kind of went back up. And it was really kind of floatish type action. So that tells me that it's really just, right now, the Opex games are at, like, you know, they're in peak form here. This was all over the map today. I'm not sure about you guys. Let me know in the comments. I got really, pretty much every trade I took this morning was really bad fills. And I don't use market orders except on like SPY or maybe like TQQQ or something. But I had bids that were hitting the ask and not filling. It was definitely Opex games. Everything felt very contrived. But and by the way, speaking of Opex, we now have triple Q options expiring on Tuesday and Thursday as well, in addition to Monday, Wednesday. So every day we get an Opex, and every day we get some more games, because who cares about price discovery anymore? And I believe I said this recently, but I think at some point this is going to blow up, and they're going to have to do some type of regulation here, because the amount of options that are traded here, 0 DTE. I mean, Goldman did that study a few weeks ago. There was like 43% of all options volume is 0 DTE. And it's going to be even more now. So just wild mess here. But in any case, markets finishing up 85 basis points with the threat of nuclear war, right? So who cares, right? Triple Q's up 1.38. Dow up fractionally here, up just 13 basis points. And the Russell managed to finish up as well, though not as much. Russell's actually was hanging in there okay, up 1.5%. So hanging in there okay. There's two takeaways today. One is that this market is super fragile, and I mean super fragile. Like, I know this was a nice move off the lows, and it was a power move here, but I think a lot of the kind of, you know, the bottom is in bulls here forgot about the fact that there's like a war going on. So there's geopolitical issues. It's not just PPI. It's not just CPI or the Fed. I mean, there's geopolitical problems here. There's capex problems in the oil market that's causing, you know, massive supply issues. You know, nat gas. We all know about that stuff, but there's still problems out here, and that is probably going to remain that way for a while. You guys know I've been saying this is just a bear market rally. It can go higher than you think, but that's really the camp I've been in. The second thing here is unless that report really escalates overnight or something like that, what's telling us right now, what the VIX is telling us, is that there's still too many people trying to short heavily right now. So take a look here at the VIX, up 2.49% today. Green, with a green market, so take note of that, right? So we've been trending up the last 3 days, and the market, has also been kind of trending up, right? So that's a divergence. Mark that down. But that spike here, take a look at this intraday. 23.75 to 26.20, really in not even an hour. 3 handles right there, 1, 2, 3, bam. Or I should say 3 candles, 1, 2, 3. And that's a 2-point move there on the VIX, and then another 20 cents or so afterwards. But that's telling you that there's too many people eager to put hedges on, which leads me to believe that we still have a little bit more upside here. I definitely can't rule that out. Now, again, bear market rallies can be notorious for turning on a dime. And especially if we have some type of geopolitical tension like what we just saw, there's nothing to say we can't gap down and absolutely panic flush. So just throwing that out there. But you guys know I've still said that there's still upside probably up into this area. My ideal setup here would be we push above that 200 moving average. If you get a close above that, CNBC, Kramer, they're all going to be cheerleading. The bottom is in, the lows are in, buy tech. And that's what I want. That's what I want to be really going heavily short. I don't have a problem if you want to start inching in this area here, because we did satisfy now that inverse head and shoulder target. So there it is. That is now hit. So we've hit that. So technically you've done that measured move correctly, but you still have, there still could certainly be some upside here. I can't rule that out. Another thing to watch for is usually they won't sell the market off heavily during an Opex week. Market makers want to keep control of things. So a lot of the time you could top out during Opex, but usually you don't have a wicked sell. Like for instance, back in August, this was an Opex week. You see the red line of the expiry there. We sold a little bit on Friday, but it was, Thursday, then Wednesday, Tuesday, we topped out. By the way, today's Tuesday. But it really didn't do a whole lot. And then it was Monday, we gapped down, and then we still really started to sell. So that's a possibility as well. You got to stay on your toes in this market. There's definitely a lot of game playing going on, though. If you're going to be day trading, only take the best setups, look for scalps, and expect equilibrium, expect mean reversion. So we were above 400. They pushed us below. We got right back just under it today. So it wouldn't surprise me one bit if we close the week right where we are right now, right on or above, or right on or below 400 there on the spiders. The ES is, that actually got pushed just a little bit lower there. That's around 35.95 right now. And then the SPX is actually a little bit of a laggard to the futures, if I'm not mistaken. Yeah, so down 39.91. But either way, you get what I mean. Just be aware of that, and be aware that this market is very fragile and can turn on a dime. But there's still, again, I think there's too many people eager to short, and that could get us a little bit higher here on the charts. Anyways, triple Qs on the day. Again, stalling out at that 100-day moving average. Technically, looks like confirmation above this blue trend line. So triple Q is doing okay. And by the way, that back tested nicely throughout the day. So we came down, and look where we sold off to on that news. And that's where we found support, right at that blue trend line. And we got a nice bid off fit. So again, I've been saying right around that 300 handle would make sense there. At least a whole round number. And then again, that sell-off bar, there's a lot of supply in there. So that would I would think, would likely coincide with this kind of 410, 412 area on the spider. So that would be an area of resistance to look at here. IWM is still the same thing. 195, I think, is your big level there. The Dow, I think, is actually already into a lot of resistance right at that 340 area. It doesn't mean it can't trade a little bit higher here, but there's a lot up here. So that pivot high, those two sell-off bars, there's a lot up there. So just I think the Dow has a little bit less upside, and it's a lot more extended too. So this has already had kind of a big run, and now we're seeing kind of tech catch up a little bit. But those are the levels here I'm looking at on the charts. We did have some earnings today. Walmart reported that was up over, did finish, just 6.5%. So it looks like it got pushed down in the last 10 minutes, but look at right where it went. I've had this trend line on here for a long time. I haven't even looked at the Walmart chart in a while, but look at that trend line breakdown, and now you're just back testing it right there. So nice little pop there for Walmart on the day and backing off. It looks like they're going through some of their bullwhip issues, and looks like they're getting through that pretty good, pretty nicely. So, you know, Walmart doing a good job. And again, there's kind of that talk of like the trading down in the recession. I don't know if I buy that too much, but either way, Walmart having a good reaction today. Home Depot, kind of a nothing burger. SE up 36%. This is one we traded a couple times earlier this year for some nice gains. Huge move there. And again, so lots of shorts in here down at these lows for a lot of these names we talked about, you know, like Carvana, you know, was up big the other day, up like 25-30%. So we're still seeing a lot of shorts get hit here. And that's why I say there's still a little bit of room for some upside. I will say NVIDIA, now you have them reporting tomorrow. That's kind of the big one. And if we look at the semis, you did put in a little bit of a hanging man there. So that is a hanging man, big gap up, and kind of a, not quite a doji, but that tail there that usually often marks distribution. So maybe a little bit of a sell the news thing coming tomorrow on NVIDIA. Doesn't mean it can't go a little bit higher. I still think this has room to about 240, 245 here potentially, but you did back off of that 200 moving average. And again, we closed above this trend line, but obviously no chance to confirm it today. We'll see what it does tomorrow. They report after the bell, so we'll have to wait and see how that does. IGV here up 2.3%. Again, kind of the same, almost the same kind of look here. Gap up, sell off, and then a little bit of a rebound right into that 100 MA. You finally got back above this trend line, so we can get rid of that now, so that head and shoulders is no longer a thing. But I still think this is max upside really right now until about 283. I think I said 282 yesterday, somewhere in that area. But IGV higher nonetheless, and you did make higher highs, so we'll give it the benefit of the doubt for right now. Dow Transport's up 0.5% here. You know, what can you say? Big move up. You had a bit of a topping tail yesterday. Didn't get the volume that I would like to see, but you got to retrace today. This is still pretty extended, and there's a lot of resistance up here. I don't think there's that much more upside in the transports unless it does some backing and filling and flagging. But for right now, it's holding up, and we'll respect it for the moment. Let's get over to yields. So 10-year, I want to talk about the yield curve first. So we're looking at the 2s and 10s. Guys, this is inverted by almost 58 basis points again. And if you take out that tail, that's a new closing low. So yeah, that's a new closing low year to date for the 210. And that tail is inverted down to 91, I believe. And that actually, it's actually erased. So you can't see it, but if you look on the top there, they erased it. That was 91. It's a fake print, but it was inverted by 91 basis points. So we'll see if it goes down there. The 210 or the 3-month 10-year, new lows now inverted by 46 basis points. These are not good prints, guys. These are not good. And I know right now the narrative is that bad news is good news. It's not. It's not. With the with inflation at 7.7%, it's not good news. So the market thinks that right now, but it isn't. So it can take time. Again, it doesn't matter until it does. There's another talk of a crypto desk blowing up today. I heard chatter about that. So I'm not sure exactly. I don't have the details in front of me. But again, there's just a lot of problems right now. The market's able to ignore it, and it's kind of climbing the wall of worry. But I believe we're going to turn the corner soon. Either way, 10-year here, nothing's changed. You did get below that 50 MA, but nothing has changed. We're still looking for 3.6 there. 30-year, 3.8 as well, so that was a little bit lower again on the day. XHB, so let's take a look at home builders here. Really kind of an inside day. It's holding up all right. We got above that 200 moving average, and we're just consolidating right now. So there's nothing wrong with XHB right now. But it's got some, you got a lot of resistance up here. So you'd need some serious backing and filling to get above that. Same thing again there with the ITB. So same pattern above the 200 moving average, but lots of resistance up here. So take a look. Big sell off, red bars, pivot high. There's going to be resistance up there. It's going to take a lot to get through that. VNQ, again, holding an inside bar here. So big gap up above the 50. Nothing wrong with it right now. This can still move higher. I don't see any problems right now. If you close below this green bar low, then the bottom can fall out though. So just be aware of that. XLF, again, just hanging in there. Stalled out at this pivot. We're just chopping. No real problems at the moment, although a lot of financials are overbought. XBD, same kind of thing here. It's still leading the market, and it's holding up for now. So we'll just give it the benefit of the doubt. Crude here just really can't sustain a trend, can it? So it just wants to go sideways here. Let's take a look on intraday. It didn't even really move that much. Yeah, I mean, you got a nice bid here, but it was already trending up here. It got a nice bid on that news, but it came right back down. I mean, it's just all over the map here. I would prefer it to really either push one way or the other right now. Whether that means coming down to the 80 handle or that 75 handle, that's one thing. Otherwise, I'd rather see it, move up and then put it in an inside bar. But right now, no real trades on it at the moment. XLE up 1% here, and it basically held inside of yesterday's kind of tail candle. Again, like the transport's not a lot of volume behind it, so it's hard to really make too much out of it. The trend is up. We'll respect it for now. I still think they are very overbought here. XOP actually holding up a little bit better. I like this pattern a lot more. It's not nearly as extended, and it's trying to kind of consolidate that move. So XOP, if I had to be in one of these, it would be that one because it's way less overbought and extended here. And OIH, again, kind of choppy right at this top end here. Probably some distribution going on. I wouldn't rule out another little pop in it, though. But again, just way overbought, and these things are due for a correction. Nat gas, okay, this is getting a little interesting here. So if you take out these 1-2 days here, you can make a case that this is really just kind of like an inside, almost kind of like a bull flag. So you moved up and now you're just going sideways. I think that's what it's kind of doing. So I talked about this a few weeks ago, but it took you about a month or so to break down. So here's your move down, September 26th, broke down on the 17th of October, or excuse me, 14th of October, and then the 17th was that next Monday. So, roughly 3.5 weeks or so. And if we look on the weekly, again, there you go, 3 weeks. And we're doing the same thing. If you just ignore that kind of outlier candle, you could make a case. I just really hate that technical damage. I mean, it's just, I wish it didn't gap up. I wish it was more of a up move and then a tail candle, but it's just that ugly kind of move there. Either way, I still think it needs to do more backhand filling, but you could make a case you're starting to get a bullish pattern. I would prefer a little retrace first to get into nat gas, but I am still watching it, and I'm keeping a close eye on it for what it's worth. Dollar index actually finished. Looks like it finished, negative today, but it did come way off the low. So basically, you could make a case you tested this level here, 105, the 105 handle. It's close enough for government work. You could call it a 200-day moving average test. It's close enough that if you came back down here, I would call the 200 moving average almost minor at this point. But either way, dollar getting a little oversold bounce. I still think it can go down to that 103 handle, as I've told you, but it has to get through 104 first. But overall, dollar index basically flattish with a nice tail candle there. And then gold still holding up well. Take a look at the GLD here. This is important. So sideways all day long, all morning long. Same thing with the spiders. Then once we broke down, gold bid, and it actually held the gains. So gold kind of working as a little bit of a safety play here. Definitely noteworthy here. I still don't think gold is quite bottomed. I believe it or not. I know it's a big move here, but there are a lot of people short gold as well, just like there are a lot of people short NASDAQ stocks. So a lot of this can be short covering here, but gold acting as a safety play right now. So we'll respect it for the time being. GDX here down 1%. So possible a little bit of divergence there. Nothing terrible, though. I still think GDX is in pretty good shape. Silver also getting a nice bid off that news, but it got faded right back down really quickly. And again, not a terrible pattern, though. I would have preferred less volume on that sell-off, but it's still holding up okay. You're consolidating above the 200. As long as you hold that 21 handle, really the 20 moving average is kind of the major level right now. As long as it holds that, you can put in a higher low, and I still expect this to get up to that 23 handle. Anyways, platinum, same kind of deal, up move, consolidating it, inside bar, no problems right now. If you lose 1,000, then this could go into a little bit of correction mode, but for right now, it's holding up, so we'll just leave it at that. And then copper here, same kind of thing. Pretty good size reversal yesterday, still inside bar, no problems right now, but it needs to do more backhand filling because there's a lot, and I mean a lot of supply up there on copper. All right, let's get over to Bitcoin here. So really just kind of hanging down in this lower range here. Again, you still have a kind of micro inside bar, so a bullish inside bar inside of a bearish inside bar. It's a little confusing. Then you had a big doji candle yesterday, so this is really trying the bulls are trying here. And again, like I said yesterday, if you can get some type of momentum going, you could get a squeeze. But right now, who really wants to be, who wants to get caught and have all of their holdings liquidated? That's really the thought process right now. And that's just what's really going on. I mean, and there's talk of more going on. We don't even know the full story yet. There's more details coming out. You see Ether there managing to scratch out a bit of a gain. Basically, everything's flattish to slightly positive here, but overall trend is still down. Still had a big bear base here on the weekly, and you had a good breakdown. So again, it's consolidating. You want to see it go up sooner rather than later. All right, anyways, let's flip back over to the spiders. Again, remember, NVIDIA earnings tomorrow. That will move tech big time. For right now, it is Opex week. We got to respect that. Respect the fact that they're probably going to try and keep this up, or at least try and hold it up until Friday and kind of mean revert this thing. So just be careful. Unless we get major news, the market probably wants to hold up into Friday. But for right now, you got to be careful. Like we just saw a rumor, an unsubstantiated rumor. It does look like it actually happened, but as far as who done it, has not been clear yet. And the VIX moved like 2.5 handles off of that in a half hour. So be careful in this market. There's lots of games being played. Only take the best trade setups. And yeah, I will talk to you guys tomorrow. You guys take care. Come find me on carnivoretrades.com. See you guys later.